we can kick off. So welcome everybody who's joining the discussion this evening. I think we might wait a minute or so and I'll cover off some housekeeping just while we wait for perhaps a few other people to log in. But just to start, a big thank you to the people that are taking time out on a Thursday evening to join the discussion. We appreciate you being here. I'm going to go through a little bit of a very light housekeeping, given that we're a pretty short session and it's a pretty straightforward agenda. But essentially, it's going to be a 45-minute conversation with the panel that we have here today. We've then set aside 15 minutes for any open questions that may not have been covered during the discussion, and we'll be covering that at the end. There is a Q&A window for the participants that have joined, and you can add questions throughout the conversation. We'll make a point, Fong Tian and myself, of covering them once we get there. So just a little bit of a brief introduction. I'm Patrick. I'm from SC Ventures. That's the innovation arm of Standard Chartered. I'm part of the founding team of a digital venture that's getting built. And I'm also joined with my colleague Fong Tian, and this is the first co-event that we've done between Chicago booth and the London School of Economics alumni clubs here in Singapore. So Fong, maybe you'd like to say a few words.
Well, thanks, Patrick. Hi, good evening, everyone. I hope everyone's doing well. My name is, as Patrick said, my name is Fong Tian. I'm president of the LSE Alumni Association of Singapore and co-host for tonight. So just a little bit of introduction about the LSE Alumni chapter in Singapore. We have over 500 alumni members, and out of about 3,000 alumni community here. We are very active in looking for ways to engage and create value for our community, and tonight's event is one of them. So thanks to Patrick, and now I'm very excited to be collaborating with Chicago Booth Alumni Club to be hosting this event tonight. And from what I learned, we actually have a very diverse crowd. So we have attendees or people who are dialing in from not just Singapore, but also Hong Kong, ASEAN, Japan, India, US, UK, UAE, Spain, Switzerland, Ecuador, Australia. It's a long list. So it seems like many people around the world are interested in this topic. So now I'll give the time back to Patrick, and our co-host and moderator for tonight. Patrick.
Perfect. Thanks, Fong. And also, just in terms of thank yous, a big thank you to the panelists for joining us this evening. We certainly appreciate it. And also to the Chicago Booth Alumni Relations team, CK and Lenora, who helped with a lot of the logistics. Thank you. So just in terms of what we're doing here, the purpose of tonight's discussion is really to bring together industry leaders to give you firsthand insights in regard to financial services, to let you know what's really driving the changes that are taking place right now. And as Fong said, it's certainly an area of interest given the diverse participants that are joining us tonight. And I think there's also an area of overlap between Chicago Booth and the London School of Economics, especially here in Singapore. Financial services is an area that's well represented with alum from both. So one of the things that we didn't want to do was have a typical panel discussion with a bunch of traditional bankers coming on and talking about what their view was. We really wanted to moderate a session with a panel that reflected the change that is taking place. So that's kind of what we've done here tonight. We hope you find the views interesting. We hope you walk away with a few insights post the discussion. So just in terms of the panel, I'm going to do a quick rundown of who we have here today to give everybody a bit of context. Some of the organizations may or may not be as familiar, and then we're going to get into the questions. So I'm going to start, I'll go left to right, at least how I see it. We've got Kelvin Tang. Kelvin heads up Nexus. Nexus is Standard Chartered Bank's banking as a service offering. It's relatively nascent. He's going to certainly shine a light on it. Standard Chartered is probably the traditional bank here that's getting represented. It's in 70 plus markets. It's been around for over 160 years, but it is changing. We also have Joanna Tang. Joanna is the CEO of Lu International. This is the international arm of Lufax Holding, and Lufax Holding is a Chinese fintech. It's on the New York Stock Exchange, market cap of 30 billion, and it's also an associated company of Ping An. Ping An is one of the world's largest insurers. And last but not least, we've got Wenbin Wong, who's the head of GrabPay. He's also the head of the merchant business here in Singapore. He'll be representing Grab Financial. Grab Financial spans the ASEAN region. Wenbin, correct me if I'm wrong, but I think you guys are in 8 markets. And you're also behind the recent Grab Singtel consortium that is in the process of building a digital bank here in Singapore, which is pretty cool. So lots of stuff going on, different perspectives. So again, thank you to the panel for joining us, and let's get to the questions. Kelvin, I think we'll start with you. If you could just begin by letting us know a little bit about yourself and also introduce us to Nexus and what banking as a service is.
Yeah, thanks, Patrick. Thanks, Wong. So hi, I'm Kelvin. I've been with Standard Chartered Bank coming up 9 years now, which is a bit of a miracle given my history before that. And I run Nexus. So Nexus is the banking as a service, as Patrick says, solution for Standard Chartered. And what exactly does banking as a service mean? There are many different iterations and translations of what banking as a service means. I mean, there's the Synapses and the Rails Bank who profess that they offer banking as a service, but it's really a digital stack as an enabler for banking as a service, as well as a card as a service. Banking as a service, in my understanding and how we are executing against it, really is the ability for a bank to go to any digital ecosystem player, Grab, for example, or any e-commerce player, Bukalapak, which is our partner in Indonesia, and or Shopee, to say, look, if you want to become a digital bank without having to go through the heavy lifting of becoming a digital bank, or building your own stack, dealing with the regulators on your own, coming out with the capital, setting up the balance sheet, dealing with ALCO, so on and so forth, plug in. We have the stack. We already do all of the above on a day-to-day basis. We have the modern, scalable data infrastructure. Here are the APIs, and here are the standards that we profess to. We do integration, we do testing, and then we run multiple iterative builds so that you get to market much faster than building your own digital bank with a lot less pain. So banking as a service is literally that, offering the ability for you to turn yourself into a bank without the heavy lifting of actually turning yourself into a bank.
Thanks, Kelvin. That's useful and insightful. And some people talk about banking as a service as potentially being the death knell for traditional banks. Do you think traditional banks are on their way out?
No, I certainly feel like there is a space for how banking was executed traditionally. I wouldn't say traditional banks because all banks have various ways of executing their businesses. There will always be a segment of customers who like specific kinds of services. The guys who are not quite private bank, but not really mass market banking, for example, are generally stuck in between. So for that's from a retail perspective, right? We're not even talking about the corporate side of the business here. So no, I don't think it's a death knell. I think it's an evolution of the business model, and it creates optionality for incumbent banks in terms of new business models. So a number of things I can think about is, once you're connected up to multiple ecosystems offering banking as a service, what happens next to the amount of data that flows through your rails on the back of that, right? How does it change? I mean, from a banking perspective, traditionally onboarding, underwriting, servicing would change. But more important than that, what products can you build on the back of that? Not just financial services products. What other products can you build on top of that? Can you build data products? Can you start providing financial remuneration to customers for FMCG companies accessing their data via these platforms, right? So many ways of thinking about it. I think it's a beginning, and I'm sure there are models that I'm not even thinking about because I'm not the most imaginative person in the world. So I think it's the beginning of the evolution of incumbent banks becoming embedded and invisible banks, and evolving the product sets that they are beyond what they're traditionally accustomed to.
Thanks. I like that word evolution. And I think that's something, Joanna, you and I were speaking about this the other night, but the fact that you're looking at partnerships and certainly expanding in spaces where traditional banks previously operate or currently operate. And maybe you can tell us a little bit more about Lu International and some of the pressing problems that you're solving in this space.
Thanks for that, Patrick. And I absolutely agree with what Kelvin said, and then I'll probably chime in on my views around the same zone of the the views over there. So, what is Lu International? Patrick, thanks for your introduction. You mentioned about us as an international arm of Lufax, which is one of the leading fintech company in China. For the people who are based in Asia Pacific, if you look at the space in just specifically on the fintech space in the region, I think China probably is very much ahead of the curve in terms of the digital capabilities. Of course, it's also thankful to previously the regulation hasn't really come into play too much, right? So then therefore you had an opportunity to grab the market before the regulation comes in. Obviously, there are a lot of news talking about regulation coming as well in the recent waves. So saying that, I think what we are doing here as a business is that we're operating a full digital wealth management platform. So, in a way that traditional banks and typically through the IM relationships and then branch services to serve those clienteles where they are middle class and middle class above, mass affluent customer base, we're trying to bring those customer base purely online from all the way from the whole account opening process, onboarding all the KYCs, ML transaction tracking and everything, right? Till, even the point that you can track your portfolio completely at your fingertips through a mobile app. I think that is something that we are really trying to solve. And Kelvin mentioned about point of that there are some customer base where probably not at the private banking space yet, right? But then it may be not really fully served, probably through the retail banking because the services and the setup is not really there for that. So we are really looking for the segments over there and to make sure that we can offer the services with the convenience as well as professional expertise. Obviously, with the connection with, as you mentioned, of Ping An and China, I think the key strengths that we are playing is really not just on the Singapore local market. It is very much a cross-border wealth management play, which is something that can elaborate a bit more in terms of my view on how digital space actually can solve the problem of cross-border financial services. And as everybody knows, when the pandemic hits, you actually got nowhere to go. You can't travel cross-border, but digital actually make it possible for cross-border financial services to continue.
Thanks, Joanna. And I think certainly talking about technology as an enabler, I think that's really, the digital transformation that financial services is undergoing. It's interesting. I think Kelvin's talking a lot about sort of the mass market, by and large, at least when he was giving his examples. You were talking about moving up the value chain in terms of the high net worth, or at least the affluent. That kind of brings me back over to Wenbin, because I know financial inclusion is something that you're certainly interested in, and you're looking at technology, not necessarily an enabler to access these high net worth folks, but you're looking at it more from a financial inclusion perspective in ASEAN. Maybe you can tell us a little bit about how you guys are solving that.
That's right. Thank you so much, Patrick. So for us, Grab Financial, and for the audience who are not familiar with Grab, we are one division of Grab, which broadly has three pillars. One in mobility, the second in deliveries, food deliveries and commerce deliveries, and the last being financial services, being the youngest and most nascent of the businesses that we operate in Southeast Asia. We are rooted in Southeast Asia and quite honestly focus here for the foreseeable future. And in this region, what we are seeing so far, and to your point, Patrick, we have gained a lot of insights and have been humbled by the empowerment that we have given to drivers and delivery partners. And we want to bring that outside of this group into all the everyday entrepreneurs that we see mushrooming in Southeast Asia. This is such an area which is so vibrant and so energetic, and there are a lot of opportunities to help businesses and entrepreneurs grow their commerce online and offline. On the topic of financial inclusion, we started out as a 2C company, as a 2C firm. A lot of our offerings have been on the consumer front. And some of the initial forays in products that help to merge financial services into ecosystem use cases, as what Kelvin was saying earlier, was in the form of micro transactions. So for example, micro insurance, we have tagged on an insurance product behind every ride. So every ride that the consumer takes, now the rider has an option to add on additional benefit and cover, and that's underwritten by an insurance firm. At the same time, we are also passionate about helping folks save. So building habits right from scratch. So every dollar you spend gets put away into a money market fund, a safe fund that is easily understandable, and we call this a dollar revolution. So things like that have got us off the line, and we hope to build on this and serve entrepreneurs even more.
Perfect, thank you. I did have a follow-on question on that. I know when you think about financial inclusion, essentially it's evening out the access to financial services. And within ASEAN, it's a pretty broad spectrum in terms of the maturity of the markets, especially some of the markets that Grab is in. If you compare, what are the basic financial services for an entrepreneur or even someone in a mass market customer here in Singapore versus Cambodia versus some of the other places. So how do you differentiate that offering based on the fact that your footprint is covering a lot of very different markets?
Yeah, absolutely. It's very tempting to see ASEAN as one block, as we refer to it as an economic block. But it's made up of different jurisdictions and countries that are so diverse in terms of demographics, so diverse in terms of regulatory agenda. They're also quite diverse in terms of language and culture. So even I spent some time in Indonesia prior to this role. Even the entire Indonesia is made up of over 500 islands, and they speak more than 40 languages and dialects. So to be able to resonate with someone in Jakarta may not mean that you will resonate with someone with a consumer in Makassar. So having to adapt to all these different nuances, to be honest, has taken a lot of trial and error and experimentation. The basic premise to make sure that we can scale is to build a foundation of tech infrastructure that is common, but at the same time can be deployed into various jurisdictions to meet the regulatory intent, and also for us to finesse the last mile experience, to differentiate the way we communicate and to bring the products to market. And that has come through, honestly speaking, with a lot of blood and soil and tears.
I can imagine. And I was going to say there's a bit of overlap. I know Kelvin was talking about sort of floating the idea of potentially a Grab utilizing Nexus. There's also a bit of overlap. You guys have both got some focus in Indonesia. I mean, Kelvin, you're there first. I think you've also got some blood, sweat, and tears of getting that off the ground.
Yep, it's blood, sweat, and tears because you're trying to operationalize something within any. In all honesty, an old 660-year-old bank, right? It's never easy, and Joanna understands that pain together with me. So yes, we could have. I think there was a potential partnership that could have been discussed. In fact, we did discuss a number of conversations with a number of partners in the region. So we settled on our partner Bukalapak in Indonesia purely because they were the right partners to go with. We had the same ethos. They really wanted to build out a full-fledged banking capability with a bank license without having to actually go and acquire one. So that worked out for them. And in the near term, we are also seeing, after our announcement with Bukalapak and Sosiola in Indonesia, quite a bit of interest across the world, because Standard Chartered obviously has 37 retail licenses or full banking licenses across the world. Any market pretty much can be enabled with Nexus and therefore become a full BaaS provider. So we have quite a deep engagement in Malaysia. We have a early stage discussion in Vietnam. We have a discussion in India, and we have some interested partners knocking on our doors in the UAE and Ghana and Kenya. So it's quite a fun journey. It's been a long, painful journey, blood, sweat, and tears, as Wenbin would say. Absolutely. And I'm only at the first of my start lines, right? There are plenty more to come.
What would you say, and I might just do sort of around the table on this, but like, what's the most pressing problem that you're trying to solve for now? Because I know you're saying you want to enable folks that want to be able to provide banking services, but maybe we can just go around and say, what is the big pressing customer problem that you're trying to solve, that you're focused on? All
right, I'll give this a go first. The reason Nexus is called Nexus is specific. It wasn't a random name plucked out of thin air. It's called Nexus because, as one would have it, a confluence of interest overlaps, right? And therefore, we call it the Nexus of interest. We solve the problem for the bank in terms of accessibility to scale, right? Technical scale in terms of data infrastructure and the rest of the product capabilities, and scale with regards to balance sheet and customer acquisition by planting ourselves and embedding the product capabilities within other ecosystems. We solve the problems of the partners of providing their own financial services at scale without having to go through the pain of acquiring a license or going through or learning, as I'm sure Wenbin and his Grab colleagues are learning now, of how to actually operate a bank end to end. We solve the problem of the regulator in the markets that we roll out Nexus in, because the regulators now don't have to think about how to regulate fintech companies trying to become banks, right? Every standard report that the regulator demands, every standard audit, every standard conversation the regulator is already embedded in the DNA of the bank, and is automated downstream reporting that we have. So nobody needs to go through that learning curve with the regulator, and the regulator seems to like the fact that that's available. And finally, we solve the problem of the consumers and the SMEs that are on those platforms for two things. One, hyper contextualization, because there is full data sharing between the platforms the partners that we work with and the bank, which means that the use cases that we create on the back of that can be quite interesting: onboarding, underwriting, marketing, servicing, and so on and so forth. And the second sub-problem we solve, which Wenbin is obviously quite passionate about, is also financial inclusion. With the availability of that data integration, we go one step further in terms of our ability to onboard and credit underwrite individuals who may not have had the privilege or the opportunity to be in the formal banking system previously. In fact, one of our findings in Indonesia was that almost 30% of the people we are going to onboard via Bukalapak never had a bank account in their life. And the reason they never had a bank account, one of the pressing, most largest reason, which baffled me for a while, was the fact that there was no bank branch within 10 kilometers of where they stayed, and therefore they never had a bank account. So with the BAS model, with our partner, we have obviated the need for physical infrastructure to provide financial services and inclusion to the mass market in Indonesia and hopefully everywhere else in the world.
No, that sounds good. And I mean, there's certainly points of friction. I think when anybody thinks about traditional banks out there, a smooth customer journey is not necessarily the first thing that comes to mind. So I would also say, as you rightfully pointed out, and I think Wenbin did as well, one of the big barriers to entry for new entrants coming in has been regulation. So I think if you can solve that and some of the plumbing in the background, that makes it a lot more accessible. Joanna, you were talking about it, at least in a previous discussion that we had, around some of the opportunities to really partner with traditional or conventional banks and not necessarily compete. And I think that's in the same spirit of what Kelvin was alluding to. Maybe you can speak a little bit more about what you're doing to collaborate with some of these traditional banks.
Mm-hmm. Yeah, so I think what Kelvin elaborated in terms of what, as a financial institutions, that you actually have the first hand of the experience that you suffer through years of the pain to gather those, right? And then you have the economy of scale, and then you have the platform, you have the expertise Now, what I see is that it's a collaboration for sure, right? There's always competition, but then different players in the value chain would have a different competitive advantage. Say, for instance, if you are a fintech player or you're a tech player to start or platform player, right? So generally your strengths that you are pretty good with customer user experience. Obviously Wenbin can speak a lot more in terms of Grab. But if you are a financial institution to begin with, you are very good, solid in terms of compliance, be able to follow the process, very solid in terms of the risk management, etc. Obviously, I'm not going to admire the dinosaur system that banking industry has, but besides that, right, everything else is very valuable. Myself actually flipped from traditional banking side to a more fintech, so I kind of really looking into both sides of the fence and be able to appreciate the advantage or strengths from both sides, right? So then, therefore, I see there is really no need for some of the traditional banks to really reinvent certain technology platforms to do that, right? Because if you think about the cost of investing into the platforms, whether it's M Financial or Lufax they're building, it's crazy. I would say our global business is only probably about 20% of adoption of our domestic China business in terms of the sophisticated level of the platform and how they run, how they use AI to tag and then track customer behavior, be able to recommend financial products, serve them so smoothly, right? And that is years of accumulation and test and learn. And you need to really have big data, be able to be able to really use the AI power, right? So how could we actually export this in partnership with banks? And that's essentially what we do as well. Not like us as a wealth management fintech businesses. So we're really focused on wealth management, right? So I'm sure Kelvin's Nexus actually have a broader banking services in the belt. So what we do is also similar, like we partnership with the bank in Thailand, 4K Bank, right? So essentially we're offering what we have as expertise is we call it platform as a service, wealth management cloud. How do you do the whole onboarding process for customers, and how do you go through the transaction processing, be able to, using AI, do investment educations and, pushing portfolios, et cetera. All those things are something that we bring in. And obviously banking have their own advantages of thorough customer base, brand name, trust. Trust is something that I really see for fintech player are lacking compared to traditional banking, right? So the 160 years of suffering is not for nothing. Obviously, it brings a lot of value, and branding equity is one of the important ones. I think in short is collaboration, and where I probably alluding into some of the points I see is that the financial services may no longer at some point in time, not now, maybe 5 years down the road, that as a standalone services, it will be potentially very much blended into any other industries, be it F&B, be it travel, be it anything, right? You can see a lot of like general insurance already blended into all those services, right? So that's where I see the collaboration matters, because otherwise you have to build everything on your own, which is not practical or efficient.
Yeah, no, absolutely. And I mean, they do talk about the current, I guess the drawbridges are coming down in a way, and you have this collaboration with traditional banks who at the moment have this unfair advantage in the sense that they've got lots of sticky customers. And there's a bit of risk aversion to trying something new. I would say, Wenbin, you might want to speak to this, because I know you're focusing on ASEAN is a very youthful region, and you were talking about entrepreneurs earlier. Arguably, I think we should really kind of not, you didn't want to look at ASEAN as one big homogenous block. I don't think we should necessarily look at customers in the same way either. There are going to be sort of boomers and maybe more affluent folks that will have that risk aversion to a digital bank or an alternative. But I think maybe you can talk about some of the segments or customer segments you're excited about, and talk about whether or not you feel they have that same risk aversion.
Yeah, I think a simplified way of how we see the world will be in terms of buyers and sellers, riders and drivers, eaters and restaurants. So let's look at the demand side, the buyers, and also the riders. It actually forms a very interesting cross-section of a market, say like Singapore. The folks who can afford point-to-point transport, Uber-like transport service, a Grab-like transport service, generally are more affluent or mass affluent, 25 to 40. The folks whom we would like to serve with financial, with products that are offering better access to financial services are actually the Zoomers, the Gen Zs, the tertiary students, the ones that are graduating, the first jobbers, the 18 to 25-year-olds. And within this group, we have seen very, very interesting insights. They are generally debit card holders. They like to pay with installments. They like to shop online. They travel. They take point-to-point transport less, but they order food more. A favorite amongst this group is bubble tea. It's one of our best, fastest moving product line or SKU on food. So these are the kind of nuances and insights that we get as we dive into the experiences and the use cases that are relevant across these segments. On to merchants or sellers. There are those that are digital natives. The first time I set up a business would be an e-commerce store or an Instagram store. And there are also those that are physical natives. I've set up a brick and mortar shop. I set up a brick and mortar cake shop. How do we help these folks respond to an event like the COVID-19 situation? So there was a bakery right across two streets away from where I live. And they had to shut for a few months last year. And they pivoted to selling cakes online through their own web store. We partnered with several store builders to help them establish that shop, also take payments and take installment payments. And we also brought in our food colleagues, deliveries colleagues, to help them bring demand from a consumer base to their products. So these are some of the interesting problems that entrepreneurs, sellers, and consumers are facing here.
And just to go back, so in terms of like a risk aversion to moving away from a traditional bank, I know you said you've done your customer segmentation and there's a bit of a variance across the different markets, but in general, do you find that people are more open to banking or putting their money into an organization that might not have been around for 160 years?
It's very interesting. We did a survey recently amongst our consumer group. We were interested in how they think about savings being a big topic in Singapore, where retirement and are you fit for retirement? Are you ready for retirement is a big national agenda. And the interesting thing amongst our segments, just the two broad ones that I mentioned, the affluent and mass affluent generally are looking at, they have a lower risk appetite. They're looking at equities, they're looking at ETFs and looking at some funds. The Zoomers, these folks are all about crypto. They're all about alternative investment tools and assets, just because their runway is longer and just because their peers and friends and families are talking about it. So I think it is also incumbent upon us to help not propagate speculative behavior, at the same time bring in tools that help them have better knowledge of what they're getting into and how to build better savings behavior.
No, that makes a lot of sense. And I think that hopefully I wasn't leading the witness too much there. Kelvin, I wanted to go back to you on that, because one of the things that I think we're highlighting is the fact that certain affluent or mass affluent segments are more risk averse, but a lot of the younger folks coming up are less so. And your business model is really enabling folks that want to provide banking services. So I would say if we timeline it forward, how, in your view, what can be done to make sure that traditional banks don't turn into dumb plumbing in the background that's enabling financial services, for people to consume, but not necessarily flagship branches, maybe that's going to be something that's a thing of the past.
I'm not sure having flagship branches is a sign of intelligent banking of any sort. So that's not how I would go with it. No, so like I mentioned earlier, right? By doing this, by building out the pipes and building out a BaaS capability, what you do is you hedge, right? And Wenbin is absolutely right. There will be a whole bunch of people who will refuse to leave their traditional bank accounts in some parts of the world, particularly the mass affluent and the emerging affluent. And those people will continue to have services from incumbent banks at least for the foreseeable future. Some of them may evolve, some of them may migrate, and those that successfully do, great. Now, the way I'm thinking about it is if you are an incumbent bank with a large network and you build a BaaS capability, essentially you're having both sides of the cake, right? You're eating both sides of the pie. You have the whole bunch of people who will be reluctant to migrate and continue to use some of your traditional banking services. And you have access via your partners' ecosystems to the entire universe of the millennials and the Gen Zs, right? Who have no problems banking with an Amazon or a Grab or Netflix for that matter, potentially. Now, as to whether or not that means that banks themselves turn into dumb pipes, I also mentioned this slightly earlier. It really does depend on how the bank is intelligent enough to evolve their business model on the back of this capability. The access to data that this model provides for the bank is unprecedented in banking, right? And access to clean data, and given the technology solutions available to banks nowadays to build a uniform scalable data solution away from the legacy systems that they used to have, creates opportunities. So let me give a quick illustration. Right? Let's say StanChart powers Bukalapak and Sosiola in Indonesia and powers, I don't know, Traveloka in Indonesia, right? 3 markets, three different partners. Effectively, Standard Chartered would have access to what Patrick does on Traveloka, Bukalapak, and Sosiola, which means that I will know when Patrick buys something on Sosiola for your wife because she loves I don't know, a makeup set of some sort. I will also know when Patrick buys himself a motorbike on Bukalapak, plus the fact that, and when Patrick pays for a plane ticket, even though COVID is rife now, somewhere else via Traveloka. And I would then know when Patrick uses any one of the financial services across all 3 platforms in any part of the ecosystem, not just online, but offline as well. Now, what do I do with that information? How do I monetize a new business model around it? Do I, like I said, start creating a sovereign data infrastructure such that Patrick can authorize access to his data for a fee? So Patrick earns interest rate on your deposits, plus if anyone wants to access the usage data of a handsome Caucasian individual aged between 25 to 35, in Singapore, I guess in this case, he gets paid $2 for the access to that data of his particular activity on all of these platforms. How does that then change the business models of the bank? It's no longer about balance sheet. It's no longer about having deposits and giving loans. It's also about monetizing that data set. So that's just one idea. What else can come out of it? Don't know. Right now, we're scratching the surface of what can be done. And this is the first step.
No, that's super interesting insight. And I think that's also that evolution you're talking about, because traditionally banks have been pretty awful in terms of data and being able to leverage their data, and even within a bank across silos and geographies. So absolutely. I guess that does bring me to the point that we were alluding to earlier around big tech. So big tech's certainly coming into financial services, and what you're finding is you talked as well about nexus and a confluence. I think there's also a confluence in the sense that you have a lot of new entrants that are coming in, fintechs that are coming in. You have banks that are trying to respond and evolve, which is what you're doing in leading Nexus. And you also have these green shoots with, Grab, who's coming in as essentially a growing out of being a super app to more than that. But just on the point of big tech coming in, what are your views around how that's going to change? Because there's sort of this lateral adjacency where they've had these hurdles with regulation and understanding sort of, regulators in various markets. Once that once that hurdle is crossed, I would say maybe Joanna, you talked a lot about sort of technology and what you guys are doing, but just what's the view of big tech in financial services going forward? And if, again, we're looking sort of 3 to 5 years out.
Yeah, thanks. So, fintech is fin and tech, and then there are financial companies doing tech. What is Kelvin doing? The tech company doing financial, like many other players, and including Grab as well, right? So I think it definitely tech companies, as we all know, that in the past, decades probably continue. I don't know what's the continuation trajectory in terms of the, maybe I won't use the word bubble, but I will say hypes, right? So it's still there, right? I mean, so I think the key thing is that, yes, you are absolutely right. They have deep pockets compared to traditional financial industry. They have deep pocket. Not saying financial company doesn't have money. The balance sheet is solid, but they have thorough approval process if you want to use 50,000, right? Kelvin, remember when we used to run projects, the layers of approval process is very solid, right? So I think the tech is very nimble in terms of being able to allocate investors' money, because the key KPI being assigned by the investors that you're gonna scale up, right? You need to take the market and run. So therefore, they are bold. They are ready to take risk. They are aggressive in terms of pricing. They are aggressive in terms of be able to offer different services. What they might be not the expertise is when regulator comes in, what do I do, right? Not necessarily there yet, because they are still relatively new to the financial industry. To handle regulator is the art and the science and the balance in between. It's not easy, dancing on your toes pretty much. So the story about China, which is kind of alive over there. And then if you see how previously WeChat Pay, Ali's, and completely sweep off the banking system in terms of the industry in terms of payment space, right? If you look at the digital space of the payments, both of them probably take somewhere close to, 85% of the market share in China on the digital payment space, right? So left the bank with not a lot of places to play in this domain. But obviously with the moment when regulator comes in, their toes are on, and then they are literally playing on the thin line of, you have to really balance that out, right? So where I see is that they will have a good runway before regulation really comes in, but they will have to tone down, cool down, and need to comply. The moment you start need to comply, we all know those capital ratios, your systems, your speed of responding to customers, all the SLAs, everything comes in, and you have to hire a lot more people, compliance folks, just probably sitting there and then to running the reports. Hopefully Kelvin can help and automate those things. But ultimately, you are increasing the staff just to comply with regulation, right? And that's an inevitable thing. So I would say that you will, at some point in time, converge into a middle point, and then that the advantages may not be so obvious from one versus the other. I think there is a little bit of that, but obviously they probably will run into some winner takes all kind of situation because of the scalability, your margins thing, when you have a healthy competition, all that's right. But generally, I see that if you have a first mover advantage as a tech company, enjoy that, I think otherwise, when regulation really comes in very concrete on fintech, the advantages also start to diminish. But if you already get the market share before that comes in, I think that's a good start point. Yeah.
No, that's super interesting. And the fact that you sort of highlighted the Chinese perspective in the sense that there is a longer runway before the regulators come in. And if you can get sticky customers in the meantime, then hopefully there's a better chance of holding on to them.
You're fine. Yeah.
This is probably a good segue, and I want to quickly go around with each of the three of you before we open up to additional questions that the audience might have. But looking forward 5 years, what are the 1 to 2 drastic changes that you see in financial services? And maybe we'll start with Wenbin.
I see 2 trends coming out of the pandemic. First is the convergence of companies and providers. The non-banking providers moving into providing financial services or FS-like offerings. For example, the advent of buy now, pay later installment schemes coming out in Australia, in the US and in Europe. Then there are the financial services providers who are then moving into an ecosystem play, much like what Kelvin was describing. So that's one trend. The second trend, which I think will form a broader narrative across a lot of industries, will be the sustainability agenda. And I think that will start to inform policies, that will start to shape consumer behavior, and also shift businesses as they work to address low or no carbon type of regulations.
Interesting. And just in terms of that sustainability piece, is that in terms of from an investment side and a lending side? Like maybe you can elaborate on how you see that evolving.
Yeah. So maybe looking at it across three verticals: investment or wealth, lending, and payments. So in investments, right now, folks are more aware of where they're putting their money into, consumers and investors alike. So that's one, and we see the creation of ESG funds. On lending, I think consumers are also getting a bit more conscious and deliberate about where or how their money or deposits are funding growth in different categories. So where are they boosting growth or extending credit to? Then there is, on the payments front, we see on commerce, we see how does the world of fast fashion, the world of Zara, the world of upgrading your phone every 2 years, converge with the sustainability theme. So I think these are shifts in which we have to grapple with, and I think financial services has a big part to play.
Great, thanks, Wenbin. Joanna, over to you. So 5 years out, what are the 1 to 2 drastic changes you see in financial services?
I'm not sure it's drastic. I think they're starting to already happen, but I will say, as I mentioned earlier, I will see in financial services become relatively invisible, blended into lifestyle services, right? So frankly speaking, we are one of the business where boring probably is the right word to describe from customer point of view, right? Like say nobody wake up thinking about my relationship with my banks, and then normally thinking about the brand that I associate with consumer goods or bubble tea, which store offers the best bubble tea and fits their taste, right? So I think the financial services may be a little bit more commodity, and hopefully that can be blended into other services and daily lifestyle that customer is into. So I think that's one, whether it's pay now, buy later. To be honest, that's a user journey when customer doing purchase, right? It has nothing to do with pay now, buy later. Buy now, pay later. That's not top of the mind, right? It's buying a handbag is top of the mind. So that's one. And then the other is that I do see cross-border financial services in a digital way that's going to speed up. I do think COVID probably put this back for a few years, just because of mainly impact people's mentality in terms of cross-border and internet globalization versus, I think, pre-COVID, and there was a lot of curiosity of different continents, people, different cultures, and therefore there's an encouragement of cross-border financial services would be one of that does require regulations to be relatively uniformed and standardized or consistent, right? But I see that probably puts back a few years, but I do see as a general trend, cross-border financial services allowing different jurisdictions play their own strengths, be it investments. I will see wealth management investment Singapore as a cross-border financial hub for particularly wealth management. I do see that as will be generally as I won't say the change, but probably will strengthen the cross-border proposition going forward as well.
Yeah, no, that's interesting. And I would say I was going to see if we can get through without mentioning COVID, but I think each one of us has mentioned it once. So I'll say just it might have put back or postponed the cross border. But interestingly, as a Canadian, I would say whenever I've gone back to my hometown, I've always kind of frowned upon how behind they are from a digital transformation perspective. And the one nice thing that I've seen with COVID is at least it seems to have accelerated that in the financial services space as well. So there's my COVID mention and Canadian mention. Kelvin, over to you. What do you think the 1 to 2 drastic changes are going to be 5 years out?
My mind's going to be short. I agree with everything that Wenbin and Joanna have said. My comment is applicable to not just the retail side, but also the corporate side of the business, largely transactional banking, not so much FM, but that's a different and distinct discussion. Now, my addition to all of their comments is this: not only is it invisible, embedded, sustainable, and so on and so forth, it will also be executed the way the consumer, when I say consumer, both on the corporate side and the retail side, are applicable. It will be executed and consumed the way the consumer wants it to be consumed, not just about what ecosystem they have access to, but also things like complete voice banking, right? The ability to make all transactions, decisions, risk underwriting, whatever, right? Via not just your app, but via voice, as opposed to having to access an app, scroll menus, and press buttons.
So like all the friction basically taken out. Cool. Okay. Thanks, Kelvin. Maybe what we'll do now is we'll transition over. There are a few questions in the Q&A window. I think Kelvin answered one of them. I see one from Stefan and one from Nawaz. So maybe I'll start from the bottom with Nawaz. Let me just bring this up here. With all new digital entrants, both in terms of financial products as well as business models coming into play here in ASEAN, we haven't really seen any changes in the market structure with respect to legacy financial services, highlighting banks. When does that change and how? I think we've heard a little bit in terms of how that's changing in ASEAN, Kelvin, with some of the work that you guys are doing with banks evolving. Does anybody else want to take a stab at that?
I think banks are definitely moving, and it's not a static play for all. We have had the privilege of working with banks at Grab in various markets so that we can put two together and give better to our customers. So for example, in Thailand, our digital wallet is powered by KBank. We are disbursing loans from Citi to our drivers and consumers in Singapore. So, and making that journey a bit more seamless and contextual. So I think banks are moving and consumer-facing or user-facing distribution channels are also evolving. And that's what I was referring to when talking about the convergence of two industries coming together.
I may just to kind of chime in there as well. I think they are moving, maybe not the pace that's so visible from external point of view. But I think the mindset change does take a little bit of time, especially for folks probably working in the bank on a day-to-day basis, unless you are working in the venture or Nexus in the digital front of the things that you don't really feel that much. But where I see the change is that they are collaborating with the ecosystem. And if you think about traditionally when the financial company or traditional financial institutions, they're very much on a standalone basis and the value chain doesn't go too far, right? So I see now the collaboration goes really expanded to multiple different industries and then various of the value chain. So I think that actually is the change, right? The change may not be of what they're doing on a day-to-day, but those are the changes that are expanding to their potential future-proof businesses. And for instance, some of the banks and that as a participation or consortium of the digital banking application, that is change, right? That is change because that's where they are saying, change with probably Moderator and managing their downside risk, right? So then you're not really completely pivot away from who you are, right? So obviously sometimes we also need to be a bit appreciate of that opportunity cost that you may have as a big bank, because you just can't simply change everything from start, because you have too much to lose. Where for a new entrant or a new player to play in a space that you really have not much to lose, so therefore of course you're going to be a bit more aggressive and bold. So I think the change is in the context of the scalability, relatively not so visible, but it's there.
Yeah, no, I agree as well. And I would even say, I mean, the last 3 years that I've been in the venture space, you can see a lot of banks are doing a collection of activities. So one is they're trying to drive innovation in the bank and new ways of working and human-centered design, the move towards agile. They're also setting up funds to invest like a hedge and sort of post Series B. And then they're trying to create new business models outside. And that's why you see this proliferation of ventures or venture teams that are coming up. And then in addition, you're also seeing some of the traditional banks engaging in setting up digital banks as well. And that's essentially a fresh build where you don't have to worry about legacy systems. So I would say, to Nawaz's point, I certainly have seen changes. I think it's certainly happening in the background. The next question, and maybe Kelvin, this is a good one for you. It's from Stefan. He's asking about data, and you were speaking about it a bit earlier. We're typically conditioned to give our data away for free, and people don't think that much about it at the moment. And whether or not people see that changing in the future, where you have a little bit more of an interest in controlling and potentially, I think he's saying, even monetizing your data. Do you see trends going in that direction?
Absolutely. I'm a fervent believer that in the long run, maybe not in 3, not in 5, not in 7, but in the longer run, that people get paid for access to their data, which is going to be it's already the new oil. I think it's cliche to say it, but yeah, I certainly see that. There's actually, interestingly, there's actually a startup in Canada, Patrick, that's working on something like this, which I quite like. It's called the Neptune Project, or Project Neptune, or something like that. Neptune, they are quite interesting. Yeah. So they essentially, the first person that can crack the ability to safeguard individual data and larger group data or corporate data, and provide the keys for these individuals, corporates, or groups to monetize access to their data, will be a very interesting business model to see for the future. Something I will certainly be working on if I wasn't spending time on Nexus.
Yeah, no, absolutely. That sounds interesting. I'll definitely check that out. We've got one other question that's popped up from Brian. In addition to BaaS, do you see demand in the Southeast Asian market for brokerage as a service, where consumer-facing services would offload traditional brokerage operations and no longer need to worry about building a brokerage stack? Does anybody want to take a stab?
I think I can,
Joanna? Yeah.
I probably can take that question and share my own view. Brokerage business, it has been, from JP Morgan, so she probably will share a lot more on that as well. I mean, obviously, it's relatively a traditional kind of business, and then it used to be very much brick and mortar. But when the pandemic hits, I recall that being seen in the news all the time, and then the traders working Wall Street, and then they were like, okay, now I have to work from home. I used to shout on the floor and buy and sell, that kind of thing. And then subsequently you see Robinhood and many others platforms and just booming, right? I would think that is absolutely where the market demand is, especially for Southeast Asia. I think there have been quite a few players over there. So if people probably have heard some of China players, and obviously not to advertise for them because they're potentially our competitors, right? But I'm just talking about the market situation. I think like Tiger and Futu, they have been pretty strong in the way of offering the superior UI UX, and they're very aggressive in terms of marketing push as well. And the brokerage business in general, unless the markets that you are sitting in have a huge capital outflow control regulations, it's pretty straightforward that you can cross cross-border and just put your money on the platform and do that, right? I mean, people sitting here in Singapore, living here, then you can certainly do that on Robinhood, many other platform players, right? So I think the key thing is a bit really hard to define whether in Southeast Asia, what to define in Southeast Asia. Is the customer base in Southeast Asia, or is the company actually based in here, Singapore, for example, right? So I think that's a little bit unclear to me, but I think in terms of demand of the market, of the investors, it's definitely there, right? So I think Wenbin mentioned about equity and also crypto, and then quite some of the brokerages are also exploring, can they actually trade, trade the cryptocurrency on the platform as well, right? So all those things are in demand. So that's how I see it. But the industry is definitely a winner takes all platform, and especially for those equity trading, because you have a huge reliance on the system. Unfortunately, equity business trading on the digital platform is a heavy requirement on the platform to be very solid and the speed, etc. So therefore, as a smaller player, you probably won't be able to afford if the margin has been shrink.
Yeah, no, that's thanks, Joanna. Thanks for fleshing that one out. We're coming to time. We said we're going to keep this punchy to a pretty sharp on the hour. I would like to, unless there are any final questions, I'd like to thank the panelists again for joining us today. We wanted to pose the question of whether or not banks are going extinct. I think we've got a lot of optimists here. It seems like they're alive and well, and they're evolving. At least that's Kelvin's glass half full perspective. And I think it was really useful to get the sort of, again, compare and contrast with a fintech and also with Grab's point of view. So a big thank you to the panelists. A big thank you to the attendees. I know that we wanted to hopefully do more of these events, Fong, going forward in terms of these joint events with Chicago Booth and the LSC. Do you have any final closing words you'd like to mention?
Oh, no. Well, thank you very much for being here with us. And I think we look forward to seeing you again.
Great. Okay. Thanks very much, guys. Have a good Thursday evening.
Thank you.
Thank you.
Thank you.